If I were starting my investment journey today in 2025, I'd focus on building a strong foundation with a clear strategy. Let me walk you through exactly what I'd do, step by step. Step 1. Set clear goals. First, I'd define why I'm investing. Am I saving for retirement, a home purchase, or building wealth? Having specific goals helps determine my timeline and risk tolerance, which shapes every decision that follows. Step 2. Start immediately. I wouldn't wait for the perfect moment to invest. The power of compound returns means starting now, even with small amounts, can dramatically impact long-term results. If I could only invest $200 monthly for 10 years at a 6% return, I'd end up with $33,300, with $100 coming from investment growth alone. Step 3. Choose the right accounts. I'd open a brokerage account with a reputable online broker that offers commission-free trading and fractional shares. If I hadn't maxed out my employer's 401k match, I'd do that first. It's essentially free money. Step 4. Build a diversified portfolio. For a beginner in 2025, I'd focus on index funds tracking the S&P 500 for instant diversification, a small allocation to dividend stocks for passive income, some exposure to defensive stocks in healthcare and consumer goods, a bond allocation based on my age and risk tolerance. Step 5. Implement a consistent strategy. I'd use dollar cost averaging, investing a fixed amount regularly regardless of market conditions. This removes the stress of timing the market and builds the investing habit. Remember, successful investing isn't about getting rich quickly. It's about making consistent, informed decisions over time. Start small if needed, stay disciplined, and let compound growth work its magic. The best time to start is now.